Welcome to Target Market Insights, the Multifamily and Marketing podcast. Each week, John Kasman interviews multifamily and marketing experts to teach you how to find the best places to invest, attract investors, and grow your portfolio. You are listening to Target Market Insights with your host, John Kasman.
Welcome to Target Market Insights, the Multifamily and Marketing Show. I'm your host, John Kasman, and I want to thank you for joining us for another great episode. Now, today we got my man, Clive Davis, joining us. Clive Davis is a full-time investor, and he has been full-time for almost 4 years. Now, he has a portfolio of over 2,000 units in multifamily, as well as 300 units in hotels. Now, prior to that, he spent 20 years in corporate America, and he is going to talk to us about how he made that transition. Let's welcome to the show, Clive Davis.
How you doing, John?
Clive, I'm doing great. Now, for anybody listening, or maybe they just saw the name Clive Davis, they may be expecting something a little different, maybe a little eerie, because I don't think that Clive Davis is still around. But maybe you could give us a little bit.
He actually is, although, and I have lots of the other Clive Davis stories, but he's probably in his early 80s now. White guy, music mogul, responsible for so many hits, Aretha Franklin, Lauryn Hill. He's worked with everyone in the music industry. But when I was in New York, I used to be confused with him quite a bit. And the joke that I tell folks is I can get you a restaurant reservation pretty much anywhere in the country. Just use my name.
I love it, man. I love it. And of course, he was big with Mariah Carey and a bunch of other superstars. So with that said, I mean, Clive, you are certainly very remarkable in your own right. Why don't you give us a little bit more context on your background?
Sure. Background is started out as a corporate transactional lawyer on Wall Street, straight out of law school. So as a newly minted lawyer, I went off and I joined a firm that was focused on servicing clients on Wall Street, investment banks on Wall Street. And I basically rotated through a corporate rotation where I worked in general banking. I did a little bit of M&A, mergers and acquisitions, did some real estate. And then ultimately I assigned to the capital markets division. And I was doing debt and equity offerings for companies, investment banks, and also their clients. So that's how I started out my career. And I did that for about 4 years before pivoting and transitioning to becoming an in-house counsel with Pfizer, the pharmaceutical company. Worked in a number of roles with them over a 6-year period. They ended up actually relocating me to Atlanta, which is home now. And this month is 15 years. I call Atlanta home. And then after Pfizer, I transitioned into another role as the chief compliance officer for a Belgian biopharma and did that for 9 years. So all in all, a 20-year corporate run before exiting and leaving the W-2 behind at the end of 2016.
No, awesome. 20 years in corporate America, working as an attorney in compliance and all those different things. And I love the fact that you worked in the financial services industry, understanding, the banking systems, investments. And I imagine that knowledge that you built working with those clients really gave you insight into your own personal finances and how you're able to grow your own portfolio.
Definitely. It definitely opens up your eyes and gives you exposure to a world that is very insular. And there are a lot of folks on the outside that don't really have a good sense as to what that world is all about. When you're in the type of roles that I was fortunate enough to be in, you get firsthand exposure, and that you can't help but have that rub off on you because you're seeing things done at the highest level of excellence. And there's that expectation that comes along with it. So that definitely rubs off on you in terms of what you see as being possible and what you see as, what does good look like for you?
Yeah, it's interesting because, recently the SEC expanded its definition of an accredited investors to include those individuals that kind of work in the roles you were in, right? So working with, high level, high net worth investors, really understanding these investments, the level of risk that's involved. I mean, what's your take on kind of the SEC's expansion of, of the accredited investors rules and starting to include these people in these, VC opportunities as well as other investments?
I think it's a move in the right direction. I think any expansion is a good thing, because you're giving people power to kind of determine their own fate. And so we've got a lot of people who are in the positions that you're referring to, who are educated. They're in an environment where they have exposure to sophisticated deals, transactions. And so I think opening up the accredited investor definition to include some of those people who haven't yet hit the accredited investor definition, they're not making that $1 million net worth outside of their personal residence, or they're not yet making that 200K a year. I think it makes perfect sense. And I wish they would continue to expand the definition and bring in and allow more people in to the party. And so again, move in the right direction. They've got more work to do, and we're all waiting to see what that might look like.
Yeah, you talked about, really opening up your eyes to a world that many people just aren't privy to, as far as, the level of investments, the investment opportunities, and just the things that are available that you came across in that investment banking space. And, I remember, reading a tweet right after the announcement was made from Serena Williams, who, obviously world-class tennis star, but she's also a pretty big investor herself. And she talked about how it really gave an opportunity for those folks who spent their time on education, really learning and understanding these instruments and these investment opportunities, but maybe didn't come from generational wealth. Maybe they didn't inherit millions of dollars to be able to invest in these deals. So they're really, investing, they're paying off, college loans and still trying to grow. And they have access, they have the knowledge, they can get into these deals, and it allows them to expand and accelerate where they're at to somewhat level the playing field a little bit. And I know we talked a lot about, what it takes to break into some of these investments. And let's talk about real estate specifically here. But for someone who is, has been listening to podcasts, someone who has decided that they want to get into multifamily investing, or even someone who, knows that there's a lot of benefits in real estate investing, but don't really know where to start. I mean, talk to me a little about kind of your experience from, dealing with all these other investments that you were dealing with to starting to build your own portfolio and getting involved in real estate.
Yeah. So, you're definitely right. It is somewhat of an insular world, and, breaking in, is in part, you're learning a new language for sure, because as you know, there's a unique language to this space that you have to be proficient in. And if you go in there and you're not proficient in the language that's being used by these people, they're going to look at you and say, who's this person? That, they don't understand how we're talking. And so you've got to, as part of your education, if you're looking to break in, especially when we're talking about larger scale multifamily, we're not talking about single family rentals and small multifamilies. We're talking large scale multifamily. It's a country club of sorts. And so if you didn't have a mother or father who had membership to the country club, or uncles or other relatives, you got to figure out, what should I wear? How should I talk? What's the language I need? What's the secret handshake so that I can gain access to these deals? So, in my experience, if we talk about, let's first talk about some of the transactions that I've done over the last 3+ years. Much of my investing has been via crowdfunding platforms. And so that has really opened up opportunities to folks that they might not have seen before. And so crowdfunding, crowdsource deals is one way to break in. And certainly I've taken advantage of that. But even that, some of those opportunities are limited to folks who are accredited investors. So if you're not an accredited investor, even though there's been this democratization that's taken place that's allowed you to gain access to deals that previously would have only been available to people who were on the inside, now you have that opportunity, but there are still barriers, there are still impediments to you potentially getting into those deals. If you're thinking about some of the deals and transactions that I'm investing in more privately, that's really been as a result of the expansion of my network. And I've really been focused over the last 3 or 4 years on truly networking and connecting. And to be honest with you, John, I did not have a healthy level of respect for networking while I was in that kind of 20-year corporate life. It just wasn't fundamental to what I did on a day-to-day basis. And you gain a new appreciation for it when you step into this world, because as you know, it's all about relationships. If you're not building relationships, nurturing relationships, it doesn't matter what your pedigree is or what your background is. Even, trying to pursue a deal, they want to know what's your experience in taking down this type of deal that you're interested in now. And if you haven't connected with partners, whether they be co-sponsors, whether they be with property management companies, whether they be with other partners, lenders, you name it, people are not going to take you seriously. You're not going to be credible to them, even if you went to an Ivy League school. Even if you wear the nicest clothing, even if you speak the language. So you got to figure out what is it going to take for me to break into this club, that is an exclusive club, and the price of admission is fairly high.
Yeah, you mentioned speaking the language a couple of times, and I think that the country club is really a good example for people to understand because we talk a lot about the deals and multifamily, and we talk a lot about marketing and making sure that you're reaching out to folks, networking. But when we talk about the fundamentals of investing in multifamily, and again, not necessarily a 2-unit, but as you get into the commercial space, you're trying to build credibility with brokers, with sellers, it's just a different game. I mean, first and foremost, you have to come across credible to the seller, right? I mean, if you're investing in a single family house, you don't have to be super credible to the seller. You just have to have the money, right? As long as you have the money, as long as you can buy it, they're open. And a lot of times you don't even have to do that. As long as you can solve their problem and convince them you can solve their problem, you can get the deal. In commercial, especially in the larger scale multifamily, a seller's going to interview you. And they're going to see whether or not you can do what you say you're going to do. And if they don't feel that confidence, if you're not speaking the language, if you don't know the secret handshake, you're not going to get those kind of opportunities. So that's a really important point to make sure that you are taking the time to educate yourself, to build the confidence that you need to go out there and instill that confidence in other people. I remember the first time I heard someone say BIPs, and I was like, what is a BIP, right? I had never heard the term before. BIPs is BPS, right? It's the basis points. And again, if you want to keep it super simple, BIPs is simply just the percentage point. It's every 10 point 10 tenths or a tenth of a point, right? So, point, from a 5.0 cap rate to a 5.1 cap rate, that's 10 bips, right? So the first time I heard it was like, oh, you better figure out what that means immediately. You can't be in these financial conversations not understanding what these things are. So to your point, it's really important to make sure you take that time and understand the language if you are looking to scale up and get into these kind of conversations. I want to stick to that theme though. You mentioned 3 years ago, you kind of started investing in the crowdfunding deals, in these crowdsourced deals rather. And then building your own personal network to be able to do more there. Explain a little bit more what that experience is like. How would you compare investing through a crowdfunded opportunity versus investing directly through a deal in your private network?
Yeah, so you've got to do your due diligence, right? And so for me, I swore after many years of formal education, I said I'm not going back to school. I'm not going to get an MBA. I've had enough of it. I've done law school. I've done grad school. No more. But what I embarked on, what I refer to it is I embarked upon a self-directed real estate MBA. And what that is comprised of is me investing. When I left corporate life, I effectively made the decision that I was going to move all of my money out of the stock market. So I, like many others, had money in the 401k of the employer that I was separating from. I had 401k money from a prior employer sitting somewhere in the IRA. And so I decided that now I have the time. I've got to be more active in controlling my investments, my money. And so because I'm a believer in commercial real estate, I said, not only am I going to kind of go down this path, but I am going to invest and put my money where my mouth is. And so what I wanted to do was to develop a diversified portfolio. And so I ended up moving my money into a self-directed IRA. And I knew that I was principally going to be investing in commercial real estate, primarily multifamily, but also some other asset classes within that, or underneath that umbrella. And so for me, crowdfunding was a good way for me to get, crowdsource deals was a good way for me to get exposure to some of these opportunities. And the way I kind of went about selecting opportunities that looked good to me was, the measure was, would this be a deal that Clive, would do, 18 months from now, or 24 months from now, when I'm further down the path and I'm looking to be more active? Is this a deal that I would do? Is it in a market that I would want to play in? And is the risk profile similar to the risk profile that I would want to take? And so I kind of applied that lens to any deals that I would do, that I was doing. And I've done deals in California. I've done some development investments in California, San Francisco, LA. I've done some in Austin, Texas, San Antonio, Georgia, in my backyard here, Florida, New York City. So diversified geographically, and then also by asset class and type. So for me, the education was really about, what is that language? What is the nomenclature that's being used by the folks in this world? Because you will get terms that are thrown at you like NOI, which is the standard, net operating income. But if these terms are coming at you in either real-time conversation or via webinar or what have you, and you don't know what these terms are, one, you better be educating yourself on what do these mean and what's the context, so that you can credibly incorporate them into your conversation and communication. That's key and critical, because if you can't do that, you're not going to be taken as credible. But also, as part of that due diligence, you need to be assessing, are these people cognizant of, and are they credible? Because it's a dating game, right? When you're considering investing with a sponsor, you're assessing not just the deal, but you're also assessing, is this sponsor someone who's credible and likely to be a good custodian of my precious dollars? So there's an education that you're going through. So for me, that was podcasts, that was attending real estate conferences, that was reading books. All of that was part of that education, on top of actually putting my money into deals and seeing how they performed. And I've had the opportunity to see at least a couple of those deals go full cycle now. And, all of that was part of my education. So you're absolutely right when you talk about you're being interviewed by the seller. Not only are you being interviewed by the seller, but the broker who's working on behalf of the seller is interviewing you, because they are essentially filtering and being kind of they are the gatekeeper as to who's going to get to the seller, because you got to jump through that hoop before you can even get to a seller interview. It's not just about, do I have the money, or do I have the lender who's giving me a term sheet? You've got to know, the broker has to have confidence in you, because they got to maintain their credibility with the seller. And so they're going to vet you. And so again, the fluency in that language in your conversations with the broker. And I realized early on, you can tell when someone's testing you, when they start throwing terms at you, and to the extent that you can respond credibly in the appropriate context, they're like, okay, this guy kind of knows what he's talking about. He's asking me about cap rates and things of that nature. And again, that gives you credibility that you're not speaking French when everyone else is speaking Portuguese.
Now, great points there. And I love that you talked about really going to get your self-directed real estate MBA, because you do have to do a lot of self-education in this game if you are going to be successful, for the reasons you mentioned. It's about credibility, and keep in mind, this is we're talking about large dollar amounts, so there's a lot of a lot at risk. So you certainly want to make sure that you're educated, you're aligning yourself with the right people so you can move your business forward. Quickly, let's talk about the portfolio. You mentioned that you've had a couple deals that have gone full cycle. You talked about Georgia, Texas, California. Where do you see the geographic landscape right now as far as your investments? What markets are you looking into, and where would you have the most interest as far as investing going forward?
Yeah. So in terms of what I'm trying to do on the active front, and really, that's really my focus right now. I'm not looking to do any more passive investing. There may be something that comes along that opportunistically, maybe one of my partners or someone is investing in something and I want to put some money into it. But for the most part, I'm 100% focused on active pursuit of multifamily on a large scale. And the market of choice for me is the Atlanta metro. So I'm primarily focused on the Atlanta metro. And there are a few select secondary markets within Georgia that I also look at deals. But if I were kind of writing my own destiny, it would be focusing in on the Atlanta metro. It's a really good market. It's a really competitive market. But nonetheless, it's a strong market, that I think has a really strong potential for years to come in terms of just the population growth. When I moved here 15 years ago, the Atlanta metro was 4.8, 4.9 million. Today, the Atlanta metro is 6.1 million. And, the projections that they have it on a pace that's going to have it growing, just continually growing off the charts. And so there's a lot happening here. We have the world's busiest airport. It may not be the world's busiest airport these days, given that we're in the heart of COVID, but in normal times, or something resembling that, where we have the world's busiest airport, and a lot of corporations are either moving their headquarters here or moving their eastern or southeastern operations here to take advantage of all of the activity and all of the development that's happening here. So there's a lot of reasons to be high on Atlanta. And because I have boots on the ground here, I'm looking to leverage that and have that be my competitive advantage, certainly vis-a-vis anyone who's outside of this market domestically or internationally. And also as a potential partner on transactions, perhaps, transactions that might be beyond my reach, where someone's looking to partner with someone who has boots on the ground and has a certain level of sophistication and understanding of the space. So Atlanta is, that's the flag that I'm waving right now.
Atlanta's a great market for a lot of the reasons you just listed. I mean, you got Coca-Cola, Home Depot. I mean, so many large corporations that are headquartered there and so many other companies that are moving there as well. And I love your stat on the population from 4.8 million in the metro to 6.1 and then projected to continue to grow. Because Atlanta is so big, let's break it down. I mean, as you look at maybe some of the sub-markets or suburbs, where exactly are you seeing that growth, or where are you kind of locking in at some of those opportunities?
Yeah, so there's a lot of growth that is happening south of the airport and kind of the southern Atlanta portion, and some of the higher rent growth within Atlanta we're seeing are in those markets, and those markets tend to be an older housing type, older in vintage, 70s, 80s product, maybe even older in some cases. So we're seeing high rent growth year over year in some of those markets. And then also as kind of what they call the aerotropolis, which is kind of the peripheral communities, surrounding the airport. There's a lot of development online there that's going to be coming to reality, coming to fruition in the next, I would say, 2-3 years. And so in addition to that, there's a lot of companies that are positioning their industrial footprint right there in that southern airport region for obvious reasons. And so a lot of activities happening there. Tends to be more of a C plus class type of housing stock. Not much competition from new housing coming into that space. It's really a value add type of play. Other markets, East Atlanta, so the Decatur of the world, the Stone Mountains of the world, we're seeing a ton of renovation activity. Again, not much competition from new housing stock. And so you're seeing people come in, They're putting an investment in interior renovations, renovating classic units, and we're seeing a lot of activity, trade activity, where people are coming in and holding properties for 3-4 years, and it's back on the market. So I like what I'm seeing East Atlanta. What's really hot, and the most recent deals that I've been in pursuit of have been in the East Cobb area. So now we're north of Atlanta proper. We're in the Mariettas, the Smyrnas of the world. The East Cobb area is a really hot county, hot area. You may know that the Atlanta Braves moved its stadium from its former location to where it is now, and that is in Smyrna, in that Eastern Cobb area. And so that has been a catalyst for a lot of activity, and you're seeing a lot of activity there now. And so again, a lot is happening. Most of it is on the periphery of Atlanta proper, but even within Atlanta itself, you're seeing a lot of activity happen there.
No, I appreciate that, Clive. I mean, great tips. I mean, just to recap, especially if you're interested in the Atlanta market, you just gave some phenomenal insight on what's happening locally. First and foremost, understand where the airport is located. Just south of the airport, there's a lot of demand, a lot of interest picking up. You mentioned the Aerotropolis, as you described it, so that ring kind of around the airport being really popular. And then looking at East Atlanta as well as East Cobb, kind of where the Smyrna is as well, and just recognizing that that's a lot of growth, there's a lot of developments, a lot of interest. So if you are looking to invest in the Atlanta market, those are the places you want to keep your eye on. Clive, we kind of started bonding and really getting to know each other a little bit more based on some folks who've introduced in conversations. You have a Facebook group, and I'd love to hear a little bit more about the Facebook group. What sparked you to launch the group, and what's your goal in kind of bringing this group and this organization together?
Yeah, absolutely. So the Facebook group is the AfricanAmerican Multifamily Investor Network. So it's a mouthful, but you can find it that way, the AfricanAmerican Multifamily Investor Network. So really, this got started as a result of me attending various conferences, and following one conference, I don't remember the specific conference, a group of individuals, probably 9 or 10 individuals, started an email chain, and someone in that chain said, you know what, we need a space, or we should start a group, or we should do something where we can communicate and share information, share resources with one another. And this was a group of African American multifamily investors that I'm talking about. And so I kind of ran with it, took it upon myself to set up this Facebook group. And initially the thinking was, we just need something that's not as cumbersome as the email chain that we were leveraging before. And so I ran with it. I went ahead and set up the group. And the vision, which has really kind of grown a little bit, the vision is around creating a space that is different from the many spaces, certainly that exist on Facebook, because I'm a member of probably 24 multifamily related groups on Facebook. John, I'm sure you're a member of probably the same or more. But I wanted a space that was specifically going to cater to a niche audience of African American multifamily investors, and not just investors, but folks who work in the space, whether they be brokers, lenders, appraisers, realtors, you name it. I wanted us to have a space where we could share information with one another. But most importantly for me, I wanted us to be able to demonstrate and be a model of African Americans in this space being successful and making things happen. And if you look at the broader multifamily space, if you attend those conferences, if you participate in those types of activities, you won't come away with the impression that there are African Americans who are being hella successful in this space. And so I kind of wanted to kind of curate a space that was going to be just that. And so I've been very intentional and purposeful in not trying to blow up the size of the group, not try to get to 1,000 or 2,000, overnight. So right now we're probably under 350 of us. But the folks that are there have a genuine interest in multifamily. And again, I want to be shining a light on those examples of success where people are doing things that are innovative, people are doing things that might have before been viewed as, no, you can't do that. Well, why can't you do that? I've got 3 or 4 people who are syndicating deals. I've got people who are lending in the billions, for these deals. And so again, that was really the rationale around it. And, I've been really pleased with the communication and the networking that's been happening within that group. And it's been a platform for relationships that have gone on and gone in other directions.
So Clive, if I were looking at the other side of it, it's like, well, do you need an African American group, right? I mean, to your point, there are certainly different multifamily groups that are out there. But why did you think that it was important to have an African American group specifically to create that platform, as opposed to again joining one of the other dozens of groups where you're already getting kind of information or getting the things that you're looking for out of those groups?
Yeah, for me, it's a matter of representation. And so we are woefully underrepresented in commercial real estate kind of as a whole. I think the percentage that I saw on a LinkedIn post as recently as this week was that we're less than 2% of the commercial real estate space. And so for me, that speaks to our underrepresentation. And when you have underrepresentation like that, it becomes harder for you to see it as being a viable space in which you're going to be welcome, and not only welcome, but you're going to be successful. And so for me, it's critical that we see those examples and we pay attention to that underrepresentation in a meaningful way. And I think we're best positioned to do that in a way that other groups who have other missions that are servicing, broader populations are not going to take the time to do it. So we got to do it ourselves.
No, Clive, I appreciate you providing that context because, I always hear both sides of it, right? And I think for me, I always like to look at groups that I'm not a part of and try to understand what challenges they may face. So I look at women investors and women in commercial real estate as an example, because there's certainly different women in commercial real estate groups. And I think it would be silly to assume that representation doesn't matter, or just, hey, it's the same information, everybody just get it. Part of it is it helps to see people who look like you, who have more similarities to you. And, as you talk about this being a country club and coming in and understanding the language and knowing the handshakes, well, if your father wasn't a member of the country club, and they know your father wasn't a part of the country club, it's going to be a little bit harder to get in there, right? And for folks who are second generation commercial real estate, certainly easier. Or for someone who, is in an industry where it's a little more aligned to commercial real estate, it's easier. But for other folks, there may be just more challenges, especially if you're tapping into your network and folks in your network aren't as privy to what investing in real estate looks like, not even to talk about investing in larger scale commercial real estate. So there's certainly more challenges to overcome when you are getting into the proverbial country club. So creating a space like that, I think, just allows people to see the representation, to support each other, to understand that, there's a network of other folks going through it. And I think that's true no matter what challenges you face. For me, sometimes it's being in the Midwest, because I was so used to seeing all these investors investing in Texas and Florida and, the West Coast, Phoenix. And I'm like, man, are there folks who invest in the Midwest? So I do think that diversity and diversification is really important. You have to make sure that you are connecting with people who share those similarities and going across board, and if you can do that, you open yourself up to be filled, to get insights, and continue to move your business forward. So if anyone's interested in checking out that club, you can certainly reach out to Clive, and Clive can give you more information. I want to transition to our bullseye round, though. You ready?
I'm ready. Let's go.
How has a failure or an apparent failure set you up for later success?
So I'm going to give you one that's a little off the beaten path. And so I thought about this a little bit last night. And I was about 11 or 12 years old. I can't remember. But we were given an assignment. We were given a plant in a yogurt cup or a yogurt container. and it was a school break, and we were supposed to take the plant home, and we were supposed to bring it back, and they were going to, assess it. It was part of a project. And so I took it home, I was watering it, and I was watching it grow, and I was really proud of how my plant was growing. Went back to school, and we went into class, and I saw pretty much everyone else had their plant had been repotted into a proper, bigger plant container, and all of their plants were much bigger than mine. And so for me, I went in thinking, I'm the man, look at how much my plant's grown. But I didn't know that I was supposed to repot it. I didn't know that I needed to position it in certain lighting and all of those things. And so what I thought was initially a success turned out to be a failure. But the reason I share that is because I never forget that story, because what it told me is that regardless of what efforts you are putting in, the activities that you're doing, there's always someone else out there who's feeding, watering, and providing more light to their plant. And so the competition isn't just what you're doing, but it's what is everyone else doing in that same lane. So that's what I'll share with you. A little bit off the beaten path, but I'll go with it.
I love that story. So much symbolism as far as, it's not just about what you're doing, but understanding that there's a process that a lot of people have already taken down and understand. And if you understand that process, you can maybe grow a lot bigger, a lot faster. And that's actually a great analogy for multifamily syndication. So thank you for sharing that. All right. Give me a digital or mobile resource you recommend for your business.
This one is easy because I pretty much use it on a daily basis. Calendly. So for those of you who don't know Calendly, they are headquartered in Atlanta, and it's head up by Tope Awatona, is the young brother who is the CEO of that company. They're headquartered right here in my backyard, but they help you with scheduling. And so basically, if you want to skip the back and forth, all the emails or the phone calls that might be necessary to put together a meeting, go check out Calendly. I can't imagine myself living without it now.
Give me the book you've recommended or gifted the most in the last year.
So I'm going to give you two. One's real estate related and one's not. So the real estate related one is Joe Fearless and Theo Hicks' Best Ever Syndication book. I think that book is excellent, and their accompanying series that goes with that, excellent. That would be one. The other one would be Just Mercy by Brian Stevenson, who is the head of the Equal Justice Initiative and has kind of dedicated his legal career to death row inmates and freeing inmates from death row, and in many cases, folks who have been wrongfully accused. And so it's a powerful book. It's a powerful movie. I've seen the movie, and now I'm going back and I'm part of a book club reading that book with my alma mater. So great book.
Give me a daily habit that helps you stay focused on your goals.
So I used to boohoo kind of mindfulness and meditation. My wife's been doing it for many years now, but it's starting to creep into my world now. So I'm doing some mindfulness in the morning before I reach for the iPhone. I'm trying to do some breathing exercises. I do some just basic floor exercises that I've always tried to maintain. And that kind of sets me up for the day.
What's one thing you know now that you wish you knew when you were starting out?
You can go bigger much sooner than you think or know. And the way to do it is to surround yourself with people who have done it. And in that company, there's so much that you can accomplish. Don't think that it's got to be a 10-year plan or 15-year plan or 20-year plan to get to the finished product. You can compress that simply by getting around people who have done it and making yourself useful to them, and really genuinely adding value to that kind of network.
What are you curious about right now?
I'm really curious to see, well, beyond the election, I'm curious to see what's going to happen in our space, the multifamily space. I think the next 5 years is going to be radically different than the preceding 5 years. And so I'm really interested to see how that unfolds and what's going to be the outcome for multifamily, which is a space that I believe in, but it's not necessarily going to look the way that it has looked for the last 5+ years.
You've given us a lot of great information, Clive. Really enjoyed our conversation today and hearing how you made that transition from, corporate attorney and working in that space and private investment space to building up your own personal portfolio, being a passive investor, now making that transition to the active side. All the great insights you provided on the Atlanta market, as well as why you thought it was so important to create a space that really focused on representation. I think that's just an important aspect that we forget, and representation is such a key thing, especially as we look to scale and to grow your portfolio. For folks that want to learn more about you, get in touch, what is the best way to reach out?
Yeah, so I'm active on LinkedIn. I'm active on Facebook, so you can definitely find me in those spaces. In terms of email, you can reach me at Clive, CLIVE, at parkroyalcapital.com. So that's PARK capital, parkroyalcapital.com, via email. And you can also get me via phone, 770-366-4093. I'm very good about getting back to folks, unless something's going on that's kind of bizarre. I will get back to you within 24 to 48 hours. I'm really good about that. So, love talking to people, love talking about the Atlanta market. So if you have an interest in the space, would love to connect with you. And Calendly is the way to do it.
There you go. Clive, it's been an absolute pleasure talking to you, man. You take care. We look forward to talking to you again soon. Thank you for being a guest on Target Market Insights, the Multifamily and Marketing Show.
Great talking to you, John.